And go.
So welcome to Fame Live Cafe, Paying Back College While Adulting. This is part 2 of a 3-part series, and tonight we're going to be talking about choosing the right lender and the right loan if you're looking to refinance your student loans. My name is Martha Johnston. I'm the Director of Education at the Finance Authority of Maine, and tonight Hannah Richards is here to join me, and I'll let Hannah introduce herself.
Yeah, I'm here because I'm the one that has so much student loan debt that I have to refinance it. So I'm going to ask all the questions that everyone else with all kinds of student loan debt is probably wondering about.
Okay, I'm ready. Bring it on.
All right, so I have my folder here because last time we talked about sort of what you need to do to get ready to refinance your loans or decide if you need to refinance your loans. I do. So I looked through a lot of the stuff we talked about last time, and one of the first things that I was trying to figure out after I went through that is, are all refinance loans the same? Like, does it matter who I get the refinance loan through, or are they just kind of standardized?
No, they're actually not all the same. So that's a great question.
Okay.
So the most important thing is to remember, just like any loan you might get, a car loan, a mortgage, whatever, different lenders offer different interest rates. They might have fees. Some might have no fees. Their customer service might be local. So no, they're not all alike. And actually, another really important thing is refinance loans might have different features. Okay. So even the products themselves might seem a little different from each other, and there might be things that are more appealing to you and what you're trying to do.
So what would some of those be? I mean, obviously the rate, but like
sure,
needing a cosigner or not, or having, I mean, what are some of the features that some might have?
You know, a special feature might be if you did automatic payments, you get another interest rate reduction.
Okay. All
so
about that.
Yeah, exactly. So, you know, when I think features, kind of think perks or benefits from using that lender. So it could be things like that.
Okay, loans with benefits.
There you go.
So what about, there's obviously, we've talked about some of the lenders that are in Maine. Is there an advantage to using a Maine-based lender versus like Bank of America or something like that?
Yeah, you know, I think there is an advantage to using a local lender, because local means that you have someone in Maine that can actually support you if you have questions. Now, it doesn't mean that a big national lender doesn't have, you know, customer service that you can access, but you're usually calling into a large call center, and it could be in a different state.
20 minutes before a human answers the phone.
It could be like that. Whereas if you're using a local Maine lender, you could walk into a branch, right? And they might have to do a little research to help you, but you've got the name of a person that can follow up with you. So I think there is an advantage to keeping things local.
Totally. That sounds good to me, because I can't, but it drives me nuts when I have to push 17 times to talk to a human.
Right.
I'm the one that just keeps pressing 0, 0, 0, talk to a human. Only sometimes works. So let's talk, we sort of skipped over it, but about rates. So I think my current loans are like between 6 and 7%, which feels like a lot. Is that a lot? I mean, what kind of rates should someone expect in a refinance loan?
Well, so let's back up 1 second and just say that when you're looking and comparing different types of refinance loans out there, there are fixed rates and there are variable rates.
Right. Okay.
So that's something to keep in mind. So you say my rates are X, right?
Yeah.
Are they fixed? Are they variable? So that's important to understand, right? So as far as fixed or variable rates with local Maine lenders that work with us, because we actually happen to partner with Maine lenders to offer refinance loans to Maine former students, Maine graduates, right? Maine people with student loan debt. So I can give you an example. The fixed interest rates for the lenders that we use, now every lender is different, but they range from 4.5% for the best interest rate up to 9%. Now that's based on quality of credit. So if you're somebody who struggles a little bit with credit, you're probably going to pay a higher interest rate.
Gotcha.
And by example, variable rates, even though they change monthly or quarterly, right now they range about 4.25 on the low end, so best credit, up to 8.83 on the high end.
Okay.
So it is a range, and it is based on the quality of your credit. So good credit, low rate.
Right, and we talked a little bit about this last time. So good credit, medium credit, like what are some parameters in terms of your credit score?
That's perfect. We did talk about that last week. So I usually say high 600s, fair credit. It doesn't mean you won't get approved, but fair credit. Low 700s, good, solid. And then mid to high 700s, and then beyond, you're in the excellent category.
So if you're mid 700s or higher, you're probably going to get the lower end of that.
You should be able to get the lower end of that.
Barring other factors.
Exactly.
Okay.
Exactly. And the other thing, too, to keep in mind, as you look at rates is also look at fees. So
right.
you might get a great rate, but if your lender charges an origination fee, that's okay. You might feel like I really want to be with that lender, so it's worth it to me to pay that fee. So it just depends.
So how would you, is there a math calculation, or just you got to just talk to someone that's really smart? How do you figure out, like, if it's a lower interest rate but it has a fee versus it doesn't have a fee?
That's a great question. Yeah, no, that's a perfect question. So the thing you really, really want to do, if you've never had to think about this before, is you really have to learn what APR is, annualized percentage rate. It's a really dry term.
Okay.
But if you actually go to the loanforme.com, which is Fame's website, kind of a central resource for all things loan, including refinancing, we describe and define what an annualized percentage rate is. But think of it this way for simplicity. It helps you take loans, just like you're asking, different interest rates, different fees, different repayment terms, 10 years, 15 years. And when a lender boils that down to an annualized percentage rate, it's the actual cost of borrowing from them over time. So it gives you an apples to apples comparison. So if you're looking at multiple lenders, look at the APR. And then you'll be able to see among those products, those lenders, who's offering the best rate.
So one loan might have a higher interest rate, but if the APR is the same as another, you're basically paying the same.
The cost of borrowing
is the same across them. Okay. Well,
and then you can compare on other features.
Can you believe I bought a house and just learned what an APR is?
That's okay. You're not alone.
Okay. So, and you were mentioning fixed and variable. How does the variable, like, when does it change or why?
Oh, sure. Really great question. So again, every lender can be a little different. Most lenders that we work with, their interest rates, I shouldn't even say this, I should double check, but I'm going to say they change quarterly.
Okay.
So your interest rate can change quarterly. I think the question I get more often about variable rates is why would I choose variable versus fixed?
Yeah.
And so a lot of that has to do with personality, right? So if you're the type of person that likes to just know what's in front of you and predict the future, you probably might like a fixed rate because there's no changing. You've got the same rate over the number of years that you're paying back the loan. And so it feels a little more secure to you. But because you're getting a fixed rate, it might be slightly higher.
Okay.
So in a rising interest rate environment, fixed rates are really attractive.
Right.
In a very low interest rate environment, variable rates actually might be...
They might drop lower.
And they might be the less expensive option.
So with a variable rate, would your payment change quarterly?
Usually your payment won't change quarterly, but as you get to the end of the loan, there will be a point in time where you're going to have to true up.
If you want to pay it off by the original payoff.
So you might have like a funky payment toward the end or toward the last few months. So in the end, you're still going to pay, the whole amount of borrowing.
Right. But it's not like 1 month you're paying $200 and the next month they're like, hi, just kidding, it's $500.
Yeah, it's not going to be like that.
Good. Okay. So another thing that I was trying to figure out is how do I, besides looking at what the rate is, and I know we talked about there are some benefits, like, should I be interviewing lenders to make sure that they're, like, nice or responsive?
It's funny. Actually, yes and no. I think I would start with what's most important to you in working with a lender. So if you think to yourself, okay, I want the absolute lowest rate I can get, and I don't care about quality of customer service, or you say, you know what? I'm willing to give a little bit on the interest rate because it's really important to me to be with a local lender who also has my mortgage and has my car loan.
Right.
So I think about the lender I work with, and all my loans and my mortgage are right on my phone app. So I can see everything. So from a budgeting perspective and paying my monthly bills.
I didn't even think about that.
It's super easy. So that might be a feature that tips you toward a certain lender even if the interest rate's a little higher.
Right.
So make a list of what's important to you, and then as you research lenders, you can kind of tick off which ones meet your requirements. And then I would put a plug in for good customer service. So, even if you think you're willing to sacrifice on good customer service, I would not. Because I think in the end, having someone who would do follow through and, be there for you is really important.
Okay. And what about, obviously things change, and if your situation changes, are there certain lenders that are more likely to work with you on trying to lower your payment or have different repayment terms more than others?
Every lender's going to be different. So that would be one of those features you do want to research, right? More often I get asked the question, well, is there a prepayment penalty? So I'll answer that one even though you didn't ask it. There usually never is a prepayment penalty, but to your point, you might want to make sure, especially if you think your income situation in the future could change a little bit, ask them what they would do to work with you if you entered some kind of financial hardship situation. Okay. So that's an important question to ask. Yeah. And I can tell you that with our lenders, with the program that we have, yes, there are certain periods where we can work with you. It's called a forbearance. Okay. It's not unlimited, but at least it's there as a little bit of a safety net. Yeah. And it's not like the federal student loans. And they have bigger and longer safety nets, but remember, you can only use federal consolidation for federal loans.
So you can't necessarily get that lower rate with the federal.
Exactly. Because federal consolidation is a weighted average of all the loans that you're consolidating, whereas a private refinance is a brand new loan. Okay. And you might just bring private loans into that refinance and okay, I can work with my lender if I hit some kind of financial hardship, but I know it's limited.
Right. Okay. So we have one question here that sort of summing up, what are some of the most popular benefits that people might want to look for?
Yeah, so I mean, some of it's things that I've already stated. I would look for interest rate reductions if you do automatic payments out of an account.
Yeah.
So if you
makes it way easier.
Yeah, exactly. If you already have a great credit score and you've got the lowest rate, and then you can knock another 0.25 or another 0.5 off your loan, that's wonderful. You might want to look for the convenience of an online app. You might want to make sure that there's local customer service. That could be something that's really important to you. Being able to make a payment online just when you'd like to.
Are there still lenders that you can't make a payment online?
Well,
where do you even buy stamps?
I know. No. I mean like a one-off payment versus automated payment.
Oh, gotcha.
So maybe you don't feel confident enough about your monthly cash flow that you want to sign up for a commitment.
Yeah. But
you want the ability to go in there and just make off one payment. Like, okay, I'm gonna, yeah. I know. I don't have any stamps either. So those are some of the benefits that I would definitely look for.
Okay. And so what does that application process look like? I mean, this is the scariest part for me because I just don't even know where to start. Like, what is how do I know if I'm likely to get approved or I don't want to be rejected?
I know, right?
In loans or in anything else.
I know, our egos are fragile. I know, I'm with you. So for most lenders, and certainly with the lenders that we work with, it's an online application. Okay. So the online application is actually fairly quick. And you'll know right away if you've gotten an initial approval. And I say initial because they're going to go ahead and ask you for income verification, right? Gotcha. So you do an online application, you tell them what your mortgage payment is or your rent payment, you do your income, your address, all that basic information, and then they'll do a credit pull. So they'll pull a copy of your credit, and they'll be able to tell right away from your credit score if you meet the minimum requirements to be initially approved. Okay. Then they'll say, okay, please provide verification of your income. So they might ask for 2 pay stubs in a row. Okay. If you're self-employed, it might be a little bit more. So hopefully you're not self-employed. Okay, keep it easy. I like that. My husband's self-employed. So they'll ask for verification of income. And then once they finally approve the loan based on all that, what the longest part of a refinance, and this is the way it is with everybody. Yeah. The longest part of a refinance is providing all those payoff figures because remember you're paying off existing loans. Right. But most lenders have the ability for you to upload those documents. So whether it's, a PDF that you can download from your loan servicer's website and load it up, but they need to know what they're paying off.
So I can find out pretty instantly whether I'm probably gonna get approved, and then as long as I didn't lie about anything on the application,
as long as you didn't overestimate your income,
then I just have to bring the receipts.
Yeah, because don't forget, it's not just credit report or your credit score; it's also the debt to income ratio calculation. Right. We talked about that a little last week. So they'll look at your income, they'll look at your monthly obligations, right, and see whether or not it calculates out that you can still handle the new loan payment. Usually a loan payment's going down, so that works in your favor.
That is ideal when that happens.
Yeah.
So we have another question. Can I refinance my federal loans? I've seen private rates that are lower, and that's actually what I'm wondering about too, because I'm looking at refinancing a federal loan into a private refinance.
That's actually one of those features you want to make sure you research with a lender.
Okay.
So lenders will decide whether or not they will allow you to refinance federal loans with their product.
Okay.
I can tell you at the Loan for Me, the lenders that we work with, we will allow somebody to refinance federal and private.
Okay.
Or just federal or just private. And what we do is we just make sure people understand what their federal loans were for benefits, like economic hardship deferments.
Right.
So we just want them to be informed before they give up those features.
Okay.
It's not a bad thing, because based on their circumstance, it might be the perfectly right time in their life to do that.
Okay, so it just depends.
It just depends.
This is actually a question I've been wondering about. Obviously, I'm able to talk to you. If someone else doesn't know what questions they have yet here, can you call somebody at Fame and just ask them all your questions?
Yeah, you can actually. So no, there's two things that you can do. If you go to theloanforme.com, you can actually call Fame's 800 number, and we have customer service folks that can answer basic questions about refinancing.
Perfect.
When you want to start getting more specific about lenders' rates and all of that, I'd still go to the Loan for Me.
Yep.
And we have a great comparison page that shows all of our lenders, all of the rates, whether it's fixed or variable, and it links right to the lender's website, so you can see the information that they've provided and how to apply.
Okay. That's good, because I'm going to have other questions that I, of course, won't remember during this video. Another question that came in, if I have a cosigner now and I want to remove the cosigner later, do I go through the process again? So do you have to basically refinance again to remove a cosigner?
That's actually a really great question, and I'll say yes and no. It depends. Or yes and yes. Here you go. I know, it depends. It depends sounds like the standard answer. One of the features you might find when you're looking at different lenders is something called a co-borrower release.
Okay.
Now that looks really attractive on the surface, like, oh, I make 3 years of on-time payments, and then it's just, poof, my co-borrower goes away. But it's really not quite like that.
Okay.
You make 3 years of on-time payments, you have to contact your lender, and then you do have to credit qualify on your own before that cosigner can be released.
So they're basically just giving you a new loan on your own, but they're sort of streamlining it for you.
Yeah.
Okay.
But there are some lenders who don't have cosigner release.
Okay.
And what you could do is you could still accomplish the same thing by refinancing, this time without your co-borrower, to see if you can get approved on your own.
Okay.
Yeah. So you can accomplish the same thing.
And is there a major benefit to being on a loan without a cosigner? Or is it really just the risk to the cosigner if you screw up?
Well, yeah, the benefit of having the cosigner is if you can't get approved on your own, most likely because of debt to income ratio. It could be that you can't get approved on your own because of your credit score, but it depends whether or not the lender will actually take the higher credit score of the co-borrower. Sometimes they want you both to be in the range.
Right.
So really it's usually about debt to income ratio.
But if you have a cosigner on your loan and they've been there forever and you're making all your on-time payments and your cosigner's not freaked out that you're going to leave them hanging, is there any reason
to refinance
to
and drop
take them off?
Well, only if they, in turn...
There's a reason for them, but not for you.
Yeah, so. Exactly, right? I mean, so if they're a cosigner and they try to, say, get a mortgage, or
that might count.
That would count.
Debt that they're responsible for.
So, yeah.
Sorry, Dad.
It might, yeah. So, you never know. Okay. They could be asking you to do it for them.
Not watching this. Okay, so we talked a little, you mentioned it earlier, I think. A lot of this information is actually on theloanforme.com. You can actually compare the different lenders that you work with.
Right.
How is that information up? Like, if I look at that today, are those rates up to date? Is that information always up?
Yeah, that information is up to date. What we would recommend is that you also click through to the lender's website.
Okay.
And if there's ever any kind of a discrepancy, there shouldn't be, but if there ever was, you could call us or you could call the lender.
Okay.
But I always would make sure that you're looking at the lender's website too, and you could always pick up the phone and make sure everything's, accurate or up to date.
Yeah.
And actually, that's another great way to test out their customer service. Right.
True. So that's see if they answer the phone with a real human.
Exactly.
All right. Okay, so one of the things, I know we've been talking a lot about, do your homework, do your research, call and ask questions. I don't have any problem asking questions. I'm worried that, so when I bought a house, I got a mortgage and it was a local lender, and then within literally hours of closing on the loan, it was sold to another lender. And this is part of the reason why I can't remember all my student loans, because they've been sold so many different times. how do I know if a lender is just going to sell it off and I do all this research and pick them because I like them and then the next day it's not them anymore?
Yeah, I'd make that part of the list of requirements that you have.
Okay.
And some people call it life of loan servicing, right?
Gotcha.
So it could be that a lender makes the loan, but they use a company to service it. They haven't sold your loan.
Okay.
But you just want to make sure, okay, so if I borrow from you and you use servicer X, will you never sell the loan? It will stay life of loan servicing with servicer X.
Okay.
So yeah, make it one of the questions that you want answered that's important to you.
Gotcha. And then what about, well, we actually have a question about this. This is what I was just going to ask. There's lots of ads, that you see in like direct mail that says, you're paying way too much for your loans. We'll make them free or whatever, How do I know if it's legit or not?
I know. So I get nervous, especially if it's a lender you've never heard of or if it sounds too good to be true.
Yeah.
If it sounds too good to be true, it probably is. So I recommend starting with the Loan for Me because we actually have resources about how to avoid scams on our website, and we'll actually share a link. That's the Consumer Financial, actually it's the Consumer FTC, so the Federal Trade Commission, and it's a scam alert. Okay. So you can go to our website and learn a little bit more how to avoid scams. But I think that goes back to really one of our first questions was, what's the benefit to working with a local Maine lender? Okay. So if you're working with a local lender that you know and you trust, then that's a legitimate program.
Okay. And then one of the things that I've been reading online in some of these blogs is that for some people, you can actually just, if you stop paying your loans, that you might end up just doing okay versus trying to refund. There are real blogs. I mean, I know this seems kind of scammy, but like there are people that propose this as a theory that you should just give up.
Well, the thing is, though, I don't know if I would do that, quite frankly, because you're going to incur incredible amounts of collection costs, and so even though you're not paying them, you're going to have collection agencies or legal fees, and it's going to sit on your credit report, for at least 7 years, if not longer, depending on the last action taken. And so you're basically trashing your credit at the expense of other things you might need to accomplish. I mean, something as basic as needing a car loan so that you can work. So that is not
problematic.
Yeah, that's not a path I would advise, but I'm going to start looking at those blogs.
They tell you like the best way is to just give up
on them
if you have a certain amount of student loan debt.
And do they say they ever recover financially? Like, do they get
basically
good credit?
Just say like, get all the loans you need before you do this, because then you won't be approved for anything.
Oh my goodness. Yeah, well then there's the whole ethical part of that, but that could be a whole other Facebook Live
So there's
chat.
No real way to get out of your student loans.
No.
Besides paying them.
No. I mean, there are loan repayment programs and forgiveness programs.
Okay.
I mean, those are always kind of interesting programs, and they're usually offered when there's like a shortage of a certain profession. Okay. So like we have a dental loan repayment, so if you come to Maine as a dentist, we'll help pay off some of your loans. Right. Now you're working as a dentist in a shortage area, so you have to know that's what you're willing to do.
Yeah.
Or like our Alphon Leaders program, if you live and work in Maine in the STEM occupations, the Alphon Foundation will help pay down some of your loans.
Yeah,
so those are neat opportunities. So I don't want to say there's never anything out there, but there are some perfectly wonderful programs that might fit you and what you're looking for.
So is there anything else out there besides the obvious one, like we'll give you complete loan forgiveness or stop paying your loans, that are definite red flags that this is probably not legit?
I would definitely say, big grandiose promises like, we can help you clear up all your loans, or don't make any more payments on these horrible loans, let us help you. Like these big huge promises that sound too good to be true. I would run the other way and I would look for someone local.
Okay.
And the other thing I would say to your other question about like, well, what are some other things? Like, is there any way to get rid of these loans?
Yeah.
Well, remember loan repayment programs, but then there's also the Educational Opportunity Tax Credit in Maine. Okay. So that's a tax credit, and that's money on the table. If you qualify, you don't want to miss out on it. So yeah, there are some things I think people just have to remember to look and come to the Loan for Me, which I know I sound like a broken record, but that's why we created the site. We created the site because there were so many places to get so much information about student loans. We wanted to make it easy for people.
I like easy.
Yeah, one place.
All right. So I think I have some research to do for myself on lenders and what I might qualify for. We're going to come back again next week.
Next week. So we have one more session together, and I'm going to read it that way. So actually, next week is applying. So the actual application process. We're going to talk about applying to refinance your student loans. So we will get into a little bit more of the nitty-gritty.
Okay.
What you'll need for paperwork, what the steps are involved. And hopefully give you all the information you need.
Great. And if you guys have any other questions that I didn't ask, you can put them in the comments on this video even after we're done, and Martha will come back and answer all of those for you.
Absolutely.
So, perfect.
Thanks, Anna.
Thanks.